Looking back, I wish I would have started paid ads a lot earlier. Once again, probably a little bit of hubris, and me thinking that I could do more than I could do.
Yo, what is up, everybody? My name is Matt Drouin. I'm the host of the Go Big Live Real Estate Investors Podcast. I am psyched out of my mind today to have Mr. Brian Briscoe, a visionary and founder of Streamline Capital Group, that has been a general partner in over 1,100 units worth over, not 1,100, we actually just updated his bio, 1,600 units worth over $160 million, and has been lead sponsor, asset manager, capital raiser, and key principal on these properties. He founded Streamline Capital Group to provide long-term cash flow and growth for its investors. He is the host of the Diary of an Apartment Investor podcast and the founder of the Tribe of Titans, a multifamily educational community. He has 2 degrees in math from the University of Utah, a master's in international business from the Naval Postgraduate School, and retired as lieutenant colonel in the United States Marine Corps in 2021. Brian, thanks for coming on the show, man. I appreciate it.
Yeah, thank you. I appreciate the invitation.
All right, so first question is a doozy. You were born, now you're here. What happened in between?
Wow. A whole lot is the answer. I mean, grew up in the Salt Lake area, just like other kids. I thought I was poor, because everybody else had Nintendos and we didn't, type stuff. But turns out, we were just kind of like right down the middle, middle class. But, a lot of my life was kind of, planned out for me by my parents. It was just the kind of the go to school, go to college, get a degree. I also served a mission for my church when I was 19, which was kind of like a real eye-opening experience for me. And that's where I realized that I wasn't poor, compared to the rest of the world. We're actually, the middle class USA is like top 1% in the world. But, long story short, wanted to be a math professor. I was good at math and I liked teaching. Turns out I didn't love math, but, bachelor's, master's degree, started a PhD program, and like 3 weeks into it, World Trade Center went down, right? Terrorist attacks, 9/11. And I decided to join the military. It was just kind of one of these, maybe subconsciously I realized that, I didn't love math and I was, dedicating an entire career to math. But long story short, went active duty and ended up liking it enough that I never went back to that math career. Along the way, something everybody's taught from the beginning, and I think this is kind of a fallacy, but your home is going to be the most important investment you ever make. And with military lifestyle, we moved every 2 to 3 years, and so how did I get into real estate? Was just kind of like, if I'm moving every 2 to 3 years, I'm not going to be able to, buy and hold a house and live in it for 20 years and get all that equity that people say you're supposed to make. And so I started figuring out, okay, how can I how can I still do this? And the answer was rental properties. Like, well, I can still buy a house. I'll just have somebody else pay the rent for me. And that's what got me started, was so 2007, bought my first single family home. Literally the month where the market peaked where I bought it. It's here in the Salt Lake City area, but that was my start. Picked up a couple homes here and there, and eventually really wanted to scale. And that's what got me into the apartment investing, is trying to figure out how to scale. Got figured out that it was more difficult than just buying a single family home, and figured out that I probably needed somebody to help me. So I got into a coaching program. That's what really launched me, was that coaching program. Got a lot of confidence, a lot of knowledge, met some partners, which is probably one of the more important things that came out of that. And that was the start of the 1,600 units, was that coaching program. Fast forward to today, Streamline Capital is my company, and, we're focused on buying apartments in the Salt Lake metro area. So, yeah.
Brian, I'm a little bit curious. Like, okay, so you started small. Like, what was the seminal moment that was like, I need to scale this thing? Because a lot of people think like I did for 11 years. All right, you start out with a 4-family property, and then you buy another 4-family property, and then you buy a 3-family property, and that sort of thing. And then, I realized, looking back on it, like when I got my money back out of these things, that they were paying me chump change every month. And I realized that it was gonna be very difficult to scale this thing. I mean, it was difficult to scale to replace my own income. But then when it came to like looking at my life partner, I was like, oh my God, I gotta, replace my wife's income so we can live life on our terms. So like, what happened to you?
It was similar. I was on a deployment, and it was it was kind of when we do our deployments. My experience with military deployments is you're either so busy that you don't have time to eat, or you're so bored that you wish you had more. I mean, something to do. And this was one of those deployments where I wish I had something to do. And I kind of had this epiphany. It was missing another birthday. My oldest daughter. I've missed more than half of her birthdays because of the military lifestyle. But yeah, I missed another birthday, and I was just like, I'm sick of this. I'm sick of missing birthdays. And by this time, I had like 16 years of service, and so really, what it was is, the single family homes that I had, on paper were doing very well. I would most of my net worth, I didn't. Most of my investments went into my 401k equivalent, but most of my net worth were sitting in these three properties. And I'm just like, holy cow, this is kind of like the key, and I wanted to be able to accelerate it. And so I started spreadsheeting and figuring out how to accelerate, and I figured I was going to need 60 single family homes, using one of those as a model, and how much it was cash flowing. I was going to need 60 single family homes to be able to, you know replace my income. And that was just like, oh my gosh, how am I going to get 60? Or how long is it going to take to get 60 was really the question, not how. But then I started looking at how can I accelerate this. And the obvious answer was, buy many at once. And so idea started with buying fourplexes, and then I started thinking a little bigger, a little bigger, a little bigger, and stumbled upon podcasts that talked about it. Got into the coaching program, and first acquisition was a 55 unit. And we've done all shapes and sizes, but it was that was kind of like the watershed moment, was that deployment where I was just miserable, missing my family, and thinking I need to change something, or I'm going to keep on reliving this moment.
Now, another random question: as I was researching your bio, you were a math guy, and I was like, and I knew you had military service, and I was thinking math background, Navy or Air Force. Why the Marine Corps?
Great question. And this a lot of it came from ignorance. I had no idea. I was never really exposed to military growing up. I lived next to an Air Force base, and I would see jets flying every single day. And F-16s is what they were. But um, I wore glasses. 20, 25 years ago, and I figured, can I be a pilot with glasses? That's what the Air Force does. They fly airplanes. I'm like, okay, I don't have 20/20 vision, so I'm not going to get in the Air Force. Little did I not know or little did I know, you can do a lot of other stuff with the Air Force. But Navy, there's these big ships, and you get stuck on a ship for 6, 8, 12 months at a time, and I did not want to do that. And so I narrowed it down to Army and Marines. And quite honestly, I think the Army recruiter was terrible. The Marine recruiter was awesome, and what the Marine recruiter said resonated with me. The few, the proud, the all those things, and the Army recruiter was basically throwing money at it. Now, also, little did I know at the time is that Marines also spend a lot of time on ships. And over my career, I spent more than a year sitting on those big gray ships. So yeah, it is what it is. But I ended up going Marines. Not very many people join the Marine Corps with 2 degrees in math. Not many people join the Marine Corps with a master's degree, first of all. So yeah, I was kind of an anomaly from the start, but it just kind of a very non-traditional path that I took. It wasn't until September 11th that I decided I want to make a change, and that's where I was already at.
Excellent. So, Brian, let's dive into your first, the big deal we wanted to make as a case study for today, because you weren't the lead sponsor on some of the other deals you did. Let's talk about Eleanor Rigby, and we're not talking about we're not talking about the Beatles song, but I'm also curious as to how it got that name. But tell me about that. Tell me about that deal.
So Eleanor Rigby actually, so the people we bought the property from had several multifamily in the area, and they named them all after Beatles songs. So, we are kind of talking about the Beatles song here, but I mean, the two doors down from the Eleanor Rigby is the Jude. A couple blocks away is Lady Madonna. A different apartment complex, but they. Apparently, somebody at the company had a love of the Beatles, but so yeah, I mean this one was different. When I first started in multifamily, I had a partnership. There were four of us, and the four of us together, equally well on paper, we equally shared responsibility, we equally shared ownership, and so I always had support from other people. I had my roles, but if I was too busy one week, I could pick up the phone, call one of the other partners, and say, "Hey, I'm gonna have a really busy week. I need you to pick up my slack." And that was easy. But long story, kind of fast forward to Eleanor Rigby. Um, after 3 years, partnering with the same guys, forming a company and whatnot, I left the company, left the partnership, and struck out on my own. So Eleanor Rigby was, I hired a couple of people instead of looking for partners, and so it was the first one that was really 100% me, and yeah, I was involved in everything else, and on a lot of the projects, I was the lead. Running these, getting the acquisition done, and on some of the projects, I was lead on asset management. But this was new company, new grounds, new city. Salt Lake City, my hometown, and everything was dependent on me. I didn't have partners; I had employees. So yeah, that ended up being kind of the yeah a really different one. First kind of really big deal. It was a $10 million purchase price, and with my previous company, we had never. I mean, we did 700 units, but we were in South Carolina where we were buying things at like 50,000 a door. So we had never actually bought something that was $10 million. Everything was a seven-figure purchase. So this is my first eight-figure purchase, and it was me with a couple of people that I had, found on LinkedIn and kind of sort of taught them how to do multifamily. So yeah, that's why we're talking about this one.
Excellent. So let's talk about the origin of the opportunity. I imagine it was just like, oh, idea in my mind. I want to do something on my own, and then this all of a sudden like just came out of nowhere on your lap. So, what was your methodology for actually finding this deal?
Interesting. So yeah, with the previous company, we had built a lot of relations and everything else, and I had always wanted to do real estate in Salt Lake City, but I couldn't convince my partners. They were all, in the Carolinas, living in and from the Carolinas, and so trying to convince them to invest in Salt Lake City, so it's something I always wanted. And so when I left the partnership, that was kind of it. And I remember talking with somebody who's actually been very influential at a conference. And I told him what I wanted to do. He's asking questions like, okay, now that you left this company, what are you going to be doing? Like, I really want to do the same thing in Salt Lake. I just need to find a partner. And he looked at me and he's like, why do you want a partner? He's like, you just left a partnership. And, I mean, that wasn't perfect. I'm like, no, it definitely wasn't. And he planted the seed. He's like, why don't you hire somebody? Find figure out what you need, from your partners, and then go look for that in an employee or two. And so that was just kind of like wow, that's actually a really good idea. And so yeah, I went out, I hired a couple of people. One of them was a fairly recent graduate from college, so he's one year out of college. And I started teaching him the acquisitions role. And what's really interesting about this one is I told him from the beginning, I'm like, you're probably going to be, analyzing, 30, 40, 50 deals before we actually find one that we purchase. And lo and behold, the first one I put on his desk was the one we ended up buying, but so, I mean, before that, I went on a tour with all the brokers. We made a really concerted effort to meet every broker in the Salt Lake City metro. So I bought a lot of lunches. My daughter worked at the Capitol Grill, a steakhouse downtown, and I got some, wicked discounts there. So, I bought a lot of steak stakes for brokers. And so the first thing was get to know all the brokers and let the brokers know, hey, I'm in business. I'm not a new guy. I'm just refocusing on a different city. But yeah, one of the brokers sent us this deal, and I'm like, hey, here's a good one for you to start out with. And a couple days later, we're on the phone. He's like, I know you said it's probably going to take 30 deals or so before we find a good one, but this one looks pretty good to me. And I started looking at it myself. We're looking over his numbers, and I'm like, you're right. This one does look pretty good. So yeah, we put an offer in. We got it accepted, and what made this a really good deal was we were able to assume an interest rate that was at 3.1%. It was a little bit lower leverage, so I think we're at 58% loan to value. So it ended up being a little bit larger of a capital raise than I had ever done before. But um, so $5 million capital raise. And this is maybe a little bit hubris here. It was difficult, but the largest capital raise I had done with the previous company was 4 million, and this is a $5 million capital raise, and I got no partners. But yeah, I ended up reaching out to a lot of people in my network and just saying, hey, who wants to partner with me on this one? I'm, we obviously have this deal under contract. I'm going to be the asset manager on it. I just need people to help raise money. And that's what we did. We got a lot of people to partner with us. And when I say just raise money, for those of you who know the broker dealer laws, everybody has other stuff that they're doing. We are compliant. It's not just raise money, but so I need to be more careful how I say things. But I brought partners in to help with everything, and put that team together, and it's just like, all right, team, let's go raise $5 million. And we closed on the property on October 25th of 2003. And so we're 1 year, 1 week in, and so far so good.
So let's talk about the methodology for building that team around the responsibility or to help with the actual capital raise. What did that conversation look like? I mean, was it like a post on LinkedIn that you did, and then you had some responses. You got on a call with them, or discussed a deal with them. Like, tell me about that. Like, let's get techy and tactical about that.
Well, I had been going to lots of conferences, doing lots of networking events, and I would kind of keep track of who did what, and when I was with the previous company, occasionally we'd bring people in as partners from the outside to help with specifically raising capital. Um, and so already had a lot of people tagged in my CRM as these guys raise capital, but it wasn't a decision today to hire somebody and let's do this tomorrow. This was like a year in the making between that guy planting the seed to hire somebody and actually hiring my first person. So there was a lot of prep on it, and so when I was going to conferences, I was specifically looking for people who could raise money, people who wanted to come in as in the co-GP format. And then really when I look at the partnership, we're looking at Eleanor Rigby. What do we need? Um, it's a large apartment complex. We had like $100,000 earnest money deposit. I think we ended up throughout the contract, we had $300,000 in deposits throughout the entire contract. And so I started looking at, what did I need from people, and risk capital was a big part of it as well. And so when I was looking for people, I made it clear that, hey, there are certain things that um, the that you're going to have to do to be part of this team. And one of that thing is you're going to have to help out with the risk capital load, And so I think I had 100,000 in. I had another guy with 100,000 in. Several people at 50,000. So we were bringing people in to fill like all the extra roles and just spreading the load. And so all of the general partners had risk capital in that deal. All the general partners were responsible for raising money, and there's certain activities that everybody is doing, on a weekly, or most of them are on a monthly basis. Um, Preparation of finances and everything else. So yeah, I mean, we basically looked at, here are all the things that we need to do to make this deal work long term. and then just making sure that everybody who came in could fill some of those roles.
So you were raising maybe 50 grand to $100,000 a pop. Like specifically, how did you do that for Eleanor Rigby?
Exactly like that, 50 to 100,000 a pop, and I've been doing a lot of LinkedIn, so it was ended up being a $5 million raise. I raised, I think, 1.3 million on that one. And, most of my investors were 50 to $100,000 chunks. I think the average on this property was like 70,000, and so, um, we had ballpark 90 investors in the property. And it was, I brought in 20 or so, and, everybody else, brought in 5 to 10 each. But yeah, it was just a collected effort, on raising the funds. Like I said, I brought in about a third of the capital, and then, we had a couple, two other groups that brought in close to 1 million. And that brings us up to, 3/4 of the way there. And I had two other groups that brought in right around 500,000. So when you start looking at it, it was just chipping away. One thing I wish I would have done on that property, and I've done on subsequent properties, I wish I would have put like a second tier for investors. This was just, vanilla, one tier for investors, one tier for GPs. But we had several checks at, 150, 200,000. What I'm doing now is every deal that I do, I'll implement a second class of shares for investors, and incentivize people to put more money in. So, if you put 250,000 or more, you get better returns. That's one thing that I wish I would have done. And I do think like a $5 million raise, that's probably at a point where we should probably look at raising the minimum investment. Instead of 50,000, do like a $75,000 minimum. But yeah, looking back at it, there's a lot of things that I think I could have done better to make that capital raise go faster. But long story short, we raised the money, we closed the deal, and 1 year into it, we're just shy of our projections, but we're in that ballpark. Um, yeah, we're starting with the same number. We're a little bit low. We're less than 1% off on our cash on cash targets.
Excellent. I mean, $1 million. I mean, that's nothing to sneeze at. I mean, that's a big chunk to raise, especially if is like, this is your first deal where you're running the show. What is your what's your framework for, I guess, contacting your current network, and then also expanding your network on like what type of framework or talk track do you use or methodology for that?
At the time, it was mostly LinkedIn. I post a lot about real estate. I think that's where we came together, was LinkedIn as well. But I post a lot about real estate. I post a lot about, the benefits of being, limited partners in real estate. And I'm very active in the DMs. I do a lot of posting, but, if people express interest, I'm moving them to the DMs. And, you know, I may spend 2 hours a week on posting, writing my posts, creating content, but I'm spending 10 hours a week inside my direct messages, talking with people and just trying to filter out who's interested, who's not, who can invest, who's not, and at the same time who can help raise money, who can't, type stuff. So that's really it. I do a lot of posting but um, recently we've kind of moved into paid ads, and we're trying a lot of other ways for lead generation. But um, yeah, when we were doing Eleanor Rigby, it was all organic. Um, and looking back, I wish I would have started paid ads a lot earlier. Once again, probably a little bit of hubris, and me thinking that I could do more than I could do. But now it's just like I kind of realized. And by the way, that the $5 million was a really tough raise. But we did do it. We did close on the property, but it did teach me that I probably needed more tricks. I couldn't just be the one trick pony. I needed to have several ways of generating leads. And ways that weren't connected to my time. For example, we're paying a company to do a lot of the lead generation for us. So now a lot of this lead generation activity is no longer on my plate. We're doing the calls with the investors, but Anyway, that's where we're at right now. But yeah, a lot of lessons learned and a lot of iterations.
Yeah, absolutely. So, Brian, to bring this deal full circle, what were some other learnings that happened during this process? And maybe not even, maybe there was some learning associated with the assuming the financing, running the deal, some battle scars in the process to close the case study on this deal.
So far, I mean, we had one of the biggest, I guess, stumbling blocks was right up front. We used the exact same property management company, thinking, well, we didn't have any good relations in Utah with property managers. We looked at the numbers, and the property wasn't being mismanaged. It was being managed fairly well, and we thought we're just going to keep the same management company on. There was three people. There was the regional property manager. There was the property manager or the regional VP or whatever they call them. There was property manager and the leasing person. Those are like the three most important people on the team. But within 3 weeks of closing that property, they had actually swapped everybody out. And so we were essentially going in with a brand new team. We thought we would have consistency and, we'd have the same people bridging the gap between ownership, and that was not as nearly as smooth as I wanted it to be, because we're new owners on a property, and the new personnel at the property management company, we're still learning the dynamics of the property. So we did kind of stumble a little bit out the gate, but we ended up working. That property management company ended up not working out, and we ended up getting a new property management. But long story short, that was one of the biggest challenges we had. Another big challenge we had, this is a downtown Salt Lake property, and homelessness spiked, in the last couple of years, and we would have a lot of people on the street, and most of them were homeless, or some of them maybe just above homeless. But that ended up being kind of a detractor for a lot of our residents. I wish I could fix the homeless problem. I really do. But my responsibility to my tenants is to make sure they have a safe place to live. And so what we did is we just basically went up and down the street talking to all the other apartment owners, and the entire street's multifamily, so up and down the street talking to their apartment owners, and we all went in together to kind of make sure we had a safe street. And so we have, security that we're all pitching in for. So we have full-time security, at the properties or on the street. And I mean, that was another big challenge that we overcame. I think the third challenge is, people who've been tracking, what's happening in multifamily. There've been a lot of new apartments, and downtown Salt Lake is kind of like the epicenter in Utah where all these new apartments went in. So, we were expecting that, and we were expecting rents to stay flat. We were expecting zero rent growth. What ended up happening is, we ended up having, negative rent growth. And so a lot of our leases, we were giving people discounts to renew, and we had to lower our rent prices. We're about back up to where we were a year ago as far as, where we're doing our leases. But I mean, that cut into what we expected our profits to be. And I mean, year one wasn't going to be a super heavy cash flow year. I think we projected 2.8% in year one, and we're going to hit 2.1. So I mean, given the challenges that we had, especially with the leases, you don't expect to have to give people discounts to stay. But anyway, from here, we're expecting rents to start picking back up again. We're expecting the next couple of years of deliveries to be very low, which should mean that rent growth is going to pick back up for the next several years. So, I mean, we're really close to on track right now, and I think we're going to be above our projections within the next year or two.
Excellent. I mean, with all those challenges you listed there, it's miraculous that you're able to actually get that close to returns. So that's absolutely incredible. So, Brian, in wrapping up right now, I mean, most of the listeners of our show are, own a couple single family houses, own a couple duplexes. They're mystified as to what they can do right now, actionable, like today, this week, this month, to position themselves to swim upstream and to doing larger commercial deals. What would be your advice to them?
Find somebody that can help you. And oh, by the way, I mentioned at the beginning, I was pursuing math because I like teaching. Well, guess what? I like teaching people how to do real estate too. So find somebody that resonates with you that can help you do it. And if you're interested, you mentioned in the bio, I do own a multifamily educational community. So if you're interested in that, I've got subscriptions. I do live stream several times a week. Lots of content in there. So find somebody that you can learn from, and they're going to help you accelerate. They're going to help you accelerate. Thank you.